Johny, thanks for joining us. Just running through the top 40 list for the day. Mr. Price up over 3%, new to the top 40. I was talking to a technical analyst earlier saying that there's some more upside potential in the stock. And of course, it is, got a bit of a pricey tag to it. What are your thoughts on Mr. Price relative to other players in the sector?
Look, I think it is one of the sort of stars in the retail space, but our general view on the retailers is that they are sort of very expensive, up at sort of 30 times, 25 times forward earnings. Looks very pricey to us. I do think there's sort of headwinds coming for the retailers, although we've said that since the start of the year. But generally, I think there's more competition coming into the country. At the top end, if we look at the likes of Zara, Topshop, in the middle market via sort of internet players like Zando. And ultimately, we think there'll also be some pressure on the lower end consumer from higher fuel prices. We had another fuel price increase last week. We expect another one in the coming months, and that will put pressure on consumers' disposable income.
Looking at the bottom of the top 40 today, Amplats down 3.8%. Late into the trading day, news that Amplats Resources has concluded the first phase of the restructuring and refinancing of the agreement with Amplats. Amplats are very small. Does this have any implications for Amplats' refinancing plans going forward, given the concerns basically in terms of its operations right now?
No, I think Amplats was largely just down on sort of continual strike action, wildcat strikes that we've seen in Rustenburg in the last couple of months. Obviously a very low proportion of their employees turning up for work, and effectively a standoff now building between the unions and company management, where Amplats has said that at some point they'll have to start to retrench those workers who aren't sort of pitching up for work. So a bit of a standoff there, and obviously a lot of uncertainty in the platinum space. Continuing to weigh on those counters.
Just as switching focus to a sector which most choose to stay away from, but perhaps you could take a long-term value investing view. Mondi, two pieces of news. The one that the acquisition of Nordinia, 99.9%, so basically 100% owned, has been completed, and then it's divesting of the loss-making newsprint business in the UK. Your thoughts on the restructuring of Mondi away from newsprint and towards packaging?
Well, they've actually done quite a sort of a sterling job in a sense. They've tried to refocus that business on higher margin paper and packaging products. The newsprint business effectively was loss-making. They had alluded to the fact that they would either close that business or sell it. I see they got a seller for that business. It wasn't sort of material to the Mondi Group. And then the Nordinia acquisition is a business that they've been looking at for some time, really more in the higher margin consumer packaging, as well as sort of hygiene products, things like nappies, etc. It looks like a much higher margin business that they're getting into. But generally a sort of a business that has done reasonably well and has divested of lower margin businesses. So,
I mean, margins at this point in time still very paper thin, if we're going to use a pun there. But going forward, are we going to see a kind of significant increase in margins? Any reason to start feeling a little bit more excited around the likes of Amandi?
It's something we owned back in sort of 2009 when it was at its cyclical lows, and effectively the recovery we saw in equity markets aided sort of Mondi quite significantly, because I guess a lot of the sort of cyclical stocks did bounce. We did sort of sell out recently, but are having a relook just because of the positive sort of fundamentals that they're trying to sort of reposition the business. They might be able to generate significantly higher margins going forward.
Talking about margins, India is an area where margins are very low, but it's all about volumes. Sanlam investing more money into Shriram Capital, 2 billion rand. How's the Indian story playing out for Sanlam right now? Because looking at the latest results, it looked a little bit disappointing if you had to look at those Indian numbers.
Yeah, I mean, Sanlam, has weathered the financial storm really well, so they do seem to be ahead of their competitors in terms of expanding in Africa, India, as well as Asia. I'm less optimistic on the Indian operations than they are. I think you have some structural forces which are against you. The first being that generally your shareholding in India is often restricted by government. So you'll see this latest deal takes them up to sort of 26%, but they'll struggle to get beyond that. We talk about volume versus margin. I think in India there's quite a lot of volume. I'll be surprised to see how much physical money they make out of that Indian operation. But I guess they are in there for the long term and are hoping to make a reasonable return.
Yeah, and they certainly do seem committed right now, increasing their stake there to 26%, as you say, of Shriram Capital. Thanks so much for joining us, Johny Lambridis, Portfolio Manager at Element Investment Managers.